So as you guys know, in the premium cycle, we mainly focus on selling cash secured puts and selling covered calls. And what does selling mean? Because a lot of people get confused that I'm always speaking about selling that cash secured put or selling that covered call to the upside. And we are selling options because we are insuring the market. That is what is technically happening. So right here, I want to explain you guys these mechanics of my strategy and give you a live example here on this ETF, which is called XLE. So this is going to be an energy ETF. So this is quite interesting as energy is very important for the future for all the AI and software stocks. And as we know, currently we're having an energy shortage. So this is a great opportunity to invest into the energy sector and being widely diversified while being in a sector that is very important for the near future. And this is quite suitable because this sector is currently trading around $57. So if you want to sell a cash secured put here, you need roughly around $5,700. So it is quite a good fit for smaller accounts that want to trade my strategy, or of course also bigger accounts if you want to trade multiple contracts. But right here you guys can see I have marked the support level in blue. So you could sell a cash secured put right here around $53. And what this does, it obligates you to possibly buy 100 shares of this ETF if it ever drops to $53. So because you sold a cash secured put at a $53 strike, let's say a month out, so your obligation is going to be valid for 1 month. Your worst case is to possibly buy 100 shares at $53. And for making this commitment, the market pays you, in this example, around $100. So you're making $100 income on potentially buying 100 shares. And you're going to need $5,300 in capital because you chose a $53 strike. So let's say by expiration date, the stock never dropped all the way to your strike price. Maybe it came down, but it didn't reach your strike price, or it went up even more. You're just going to keep that premium. So you made $100 in 1 month on a $5,300 investment. That is a very good return on your capital. So what can also happen is that the stock came all the way down and you got assigned right here at $53, and now you own 100 shares of this ETF. What you can do now is you can do exactly the same. We are just changing it to the upside. So we are selling covered calls. Why covered? Because they are covered with the 100 shares that you own right here at $53. So now you can say, all right, I'm going to sell my 100 shares. If the ETF goes all the way up to this resistance level here at $63, then you're going to sell your 100 shares at $63. And for making this commitment once again, the market is going to pay you a premium once again. So you can, for example, collect another $100 for making this commitment. And here you have two possible outcomes again. Either way, the stock is going to rise all the way to your covered call strike price, and your shares are going to be called away. So that means that you're going to sell your 100 shares at the strike price that you chose. So you made that premium that you collected to the upside, plus the capital gain in between $53 where you got assigned and $63 where you got assigned to the upside. So you made $10 in between. And as we know, options come in a 100 pack. So 10 times 100 is going to be an additional $1,000 in capital gain. That is outcome one. If your shares are going to be called away because the price went to your covered call strike price, but it doesn't reach your strike price up here, then you just keep the premium and you can just sell another covered call. So as you guys can see, this is quite a conservative strategy to generate a monthly passive income, and you will profit from the premiums that the market is going to pay you. And every time you're going to get assigned on your covered call, you're also going to benefit from a large capital gain. So if this is interesting to you and you want to understand the mechanics and fundamentals of this strategy more in detail, then click the link in my bio. I have a free course there for you guys. You can check it out. If you really want to get started here, then join my paid community. I have another course there where I explain every single step from A to Z. And I also have a live chat there with you guys where I am sharing my live trades, which I'm currently placing in the market, so you guys can benefit from that as well. So click the link in my bio and I will see you guys there.